afternoon, everyone. Welcome to Stock Market Today. My name is Ken Shreve, joined today by our news editor, Ed Carson. Well, let's see. On Thursday, we had a pretty violent sell-off during the last half hour of trading. Today, it was pretty sharp selling during the final hour of trading. So for the bulls, it was not a great close on Thursday and not a great close on Friday. So we'll get down to what happened in the broad market today. But before we do that, we'll swing over to Ed, who's got three stocks to watch today.
Yeah, Ken. Apple was a big loser. It was one of the catalysts for today's retreat. So that one pulled back to some major levels. We also had Décor, which went through the roof, as it were, and Entegris, which at least briefly flashed a buy signal.
Okay, well, as we do on Fridays, I know we like to start with a look at a chart of the Nasdaq via Ameritrade's Think or Swim platform, and we can see a pretty sharp down session for the Nasdaq. Looks like it ended with a loss of 0.9% in pretty heavy volume. So we're going to add another distribution day to the Nasdaq's count. Higher volume decline, some signs of institutional selling in the market today. So what do you make of the Nasdaq's action today, Ed?
Yeah, I mean, this was a little bit more serious. We've now down 3 straight days in the Nasdaq. The Dow, S&P, and Russell are all down 5 straight days. The first few weren't so bad. I mean, it was like, okay, just a couple of losses. Down to the 21-day line, it's not a real surprise. We had this big run, and you could argue that growth stocks even did better. We're doing better than this Nasdaq run. So it may not be that surprising. Not a lot of fun. We had talked about, I know you had, I know I did, and some others on IBD Live and on these videos in the afternoon that, maybe it was time to be a little bit more defensive, even just a couple of days ago. Not bearish, but maybe just take some partial profits, maybe just stand back and not buy anything new, and let the market digest its gains. And we didn't know a pullback was coming, but it just felt like there was a little bit more of that risk.
Yeah, a little disconcerting to see this late session selling. I remember I filed a Stock Market Today story on the homepage of investors.com at around 1:30 p.m. Eastern time, and major averages were mixed, mostly unchanged, basically flat. And there was a lot of good movement in individual stocks, and things certainly turned negative by the close. Okay, we switch over to some MarketSmith charts here and maybe take a look at the S&P 500, which fell. It looks like the S&P was down 0.7%. About 0.8%. And volume is going to be a close call on the NYSE. So we can see a drop below the 21-day moving average. And, the 50-day line has been a pretty good support level for the S&P 500 for many months. We'll see if it gets down there. And if it does, will it find support again?
Yeah, I mean, you see every once in a while it has these 1 or 2 days where it drops below. Now, is this going to be the 1 or 2 day? You never know if this time it's going to fall further and faster. You can't just assume that it'll bounce back. I mean, there's been this nice trend where it holds until it just takes a break. So it'll be interesting to see if that can do it. Definitely, as you say, the volume definitely picked up today.
Absolutely, boy, that does look like the volume really picked up, I think, during the final hour of trading too. So not the best of signs, but like you said, we're still in a confirmed uptrend. All right, let's go to the Dow, which also, like the S&P 500, extended its losing streak to 5 sessions, and it is in. Boy, this was a pretty ugly session for the Dow too. Took out that recent low of 347.31 and firmly below its 50-day moving average as blue chips start to lag here.
Yeah, I mean, obviously the blue chips haven't been leading for quite a while now. You can look at this relative strength line. It's been lagging, but nonetheless, coming down pretty hard and undercutting the August low. I mean, this is when the market bounced and all the growth stocks really rallied. So at least the Dow's, now going back quite a bit. So not great action there, that's for sure.
Okay, and IWM just checking in on the Russell 2000 because that closed just above its 50-day moving average on Thursday. And look at that, it closed right at the 50-day line by the close today.
This was one of the really encouraging things about the market was the Russell finally getting above the 250-day line and maybe seeming convincingly doing so. But the moment it really seemed to clear it and start aiming at the all-time highs, it's come back down. That's not a good sign for market breadth. So yeah, this is one of the more worrisome signs. I think even more so than the Dow, especially if this goes, undercuts from here, really goes below the 50-day line. Definitely something to watch.
Okay, so for all the self-directed investors out there that are, managing their own money and buying and selling their own stocks, we'll give some advice about what to do in this type of market environment in just a little bit. But let's get to the three stocks to watch today. We'll start by looking at Apple, which boy, there was some big sellers in Apple today. Look at that price bar, pretty big. This one just weakened considerably too. Still holding above its 50-day moving average. What was the headline that drove the decline today, Ed?
Well, they had an Epic defeat. They lost a court ruling to Epic Games, which is the maker of Fortnite. Basically, they were fighting over the App Store. Apple won some of the battle, but the big one they sort of lost. The judge said you can't bar Fortnite, Epic Games and others from sidestepping the App Store fees, essentially, or giving ways to do that. The App Store is basically pure profit for Apple. I mean, they get this 30% fee off of apps. So that's a big deal for them to lose that. I also saw Google take a hit. And so that's a reason why the market came down. But yeah, it went right back below this early, this sort of aggressive, little consolidation here. It's right around the 10-week line. It's getting close to the 50-day line. Actually might be, it's still just above the 10-week line. If we bounced here, would this be something you'd be interested in, Ken, or is this something you're like, I don't know, I don't like that outside week?
Well, yeah, I mean, that's what I was going to say. First of all, I mean, it was a very bearish week of price action. There wasn't a weekly volume this week, wasn't huge, but you can see it was a big weekly spread. So if this thing does firm up next week and we do see meaningful signs of support at the 10-week, I think it's okay. But listen, we've got a couple of warning shots from the Nasdaq on Thursday and Friday. So it's just a time where you got to be very, very cautious with new buys. The heavy volume sell-off in Apple today was very disconcerting. So I'm going to wait for Apple to prove itself more, even though it is near its 10-week moving average, which often turns into a support level. We just need to wait for meaningful signs of support. Are buyers really going to come in and support the stock here? And if it can, move back above that recent high of 150 and show meaningful signs of institutional accumulation, maybe you can, start a small position, but not right now after Friday's sell-off. So, okay, let's move on to another stock retailer. Justin and I talked about a couple retailers yesterday. Still nice pocket of strength in the market. Floor and Decor, which closed off highs, but you had a little breakout attempt today. Got pulled down late with the broad market, but this continues to be a strong performer in the retail sector.
Yeah, I mean, this was holding up for quite of the day, and then right at the end, the market fell off. I'm just going to quickly go to a 5-minute bar so you can just sort of see in that last stretch here. It came in the last couple of hours or so, came down and really gave up some of those losses. But still, a lot of stocks, fell quite a bit. There was this is a flat base sort of on a weekly chart, a base on base kind of formation. You could argue that, if you bought it early here, you could have bought it early on around there, sort of a short term, and you're still up on that if you bought it early. Again, buying early has just seemed to be the way to go in general, a lot of the cases, or at least to start a position. The relative strength line, I mean, really strong gain. The market's reversing, and this one had such strong action on Thursday and Friday. So this is basically at a high. It'll probably turn into a blue dot in a few minutes.
Yeah. So go back to the weekly chart here and see where this one is in its move. I mean, this latest breakout attempt, like you said, is a base on base pattern. Looks to be, let's see, Market Smith is calling it second stage. It looks like.
Second stage.
Second stage. What I find most compelling about Floor and Decor is that this company is still in the early stages of its expansion. I think it still has plans to double its store count. So just like the technical action here, there's your blue dot on the weekly chart. Pretty healthy relative strength line as the stock sits near highs. So Floor and Decor, Lululemon, a couple of pretty compelling stories in the retail sector right now. All right, let's move on to our final stock. Chip equipment firms, semiconductor equipment firms were on fire for a good portion of at least early in Friday's session, but boy, a lot of these stocks gave back gains, including Entegris, which was looking pretty good in the morning.
Yeah, this is, and still showing this because this is what happened to a lot of stocks. I mean, it did eke out a gain, but boy, that was not much fun. It was looking really good. It has this flat base. It's had a lot of sideways action. There's a number of chip gear makers like this that have had this sort of weak action, though. It's been above its 50-day line. You could have argued that there was sort of an early entry there or a trend line, but it undercut that. It would have been like it's just difficult. It just shows you no matter what no matter what you've got, it's really hard to fight the tide when the market or the sector that you're trading in, if that goes against you, it doesn't matter if everything else was looking good up to that point.
Yeah, still a difficult environment for technical breakouts. Maybe if we had time to quickly look at KLA, which actually tried to break out of a base today, and KLAC is the ticker there, and yeah, it kind of, moved over that 350, 671 high, but like a lot of other chip equipment firms, kind of gave back early gains.
Yeah, I mean, arguably the better entry, again, early entry like a trend line or drawing the line, and that you'd still be up on again because of these kind of situations. But yeah, disappointing, but not surprising given the market. The relative strength line powered higher today. I mean, because that's the kind of market it is.
All right. Well, the key question, is what to do now. Obviously, a lot of our viewers are self-directed investors. They, manage their own money. Many, are probably sitting on some nice gains from stocks they bought, a few months back. What do you think the best course of action is now? Do you think the market is firing enough warning shots here to kind of, go from offense to defense? Might consider trimming some profits, taking some money off the table?
Yeah, that's probably the way to go. It's certainly not to be adding to right now. And I think that's also, having these late sell-offs, it's like it's hard when you buy these stocks, so they look promising and then to sell off. That's just another difficulty. We've been saying, to maybe trim positions the last few days just in case of this. And maybe if the market, whether it's the 21-day or the 50-day line, if we rebounded, then maybe there'll be a lot of buying opportunities like we've seen in past times. But that we might keep selling for a while. And how much do you want to see that erode? It depends on all these positions. You may have core positions you've owned for months and months and they're doing great. The recent action is nothing to get panicked about. It's just a little bit management. Do you want to maybe raise a little cash, not be so exposed, and just prepare for the next run?
Yeah. Well, I mean, the bottom line is, we're going to read the big picture column in a couple of hours, and it's still going to say market in confirmed uptrend. It's we're going to add a distribution day to the Nasdaq's count today, so I think it'll be 4 on the Nasdaq and 3 on the S&P 500. We're scheduled to lose 1 on the Nasdaq on Monday due to time, so always monitoring signs of institutional selling in the market. But we're in a confirmed uptrend, and you definitely want to give your winners enough room to work so you can hold on to a big gain, but certainly taking some money off the table here, maybe trimming some winners, cutting a 10% position down to 5%, however you want to do it, but just playing a little defense here probably makes sense. And what's seasonally a pretty difficult time for the market.
Yeah, September and October, it's the worst of times, the best of times. So what you want to do is be ready. Obviously you can't discount on it, but yeah, just a little defense isn't so bad.
Okay, well, very good. Thanks very much for your insight, Ed, and hope everyone has a great rest of the afternoon and a great weekend. We'll be back here Monday. Allie will be back here Monday after a well-deserved vacation, so we'll welcome her back, and we'll be back Monday for another Stock Market Today video and see what the market brings us next week. Thanks again, Ed, and thanks for watching, and we'll see you back here on Monday.